Hey everyone, it's Evan from the Trade Risk on Tuesday, September 30th, the last day of September, and let's jump right in. So here on the SPY, you can see that we're still in a, indecisive, bearish type pattern here in the short term. We are still below this previous 199 support, and we are in a downtrend that's been ever since the 19th. So about 2 weeks of trading, short term, we're in this downtrend, and you can see we're sort of chopping out a new range here from 196 to 198. So, the questions will be, are we going, is this just sort of going to be a continuation pattern before we crack lower and continue our downside momentum? Or is this going to turn into a beginning of August type multi-day consolidation, which ultimately will lead to a breakout and, retest of the highs? So, only time will tell. No one knows right now, but you can see it's still just a wait and see, very choppy environment that we're in. The candles are, getting larger in here. Intraday, the swings are wider. There's some more volatility, especially in the indices and in individual names. So it's a pretty tricky environment. Momentum's not really working on either side. Especially today, you saw a lot of mean reversion and just range bound markets. So, things are working and things aren't working, and we'll get into some stock specifics in a little bit. First, let's look at the IWM, because this is really, and this is the ETF that tracks the Russell 2000 small cap index. This has been your underperformer. You can see today we did close below or new weekly lows and above the previous few days. And, if you zoom out or really look at a weekly chart, I think this shows a good picture here. Obviously, just a hell of a run here since the beginning of 2013, and you can see really, we're just really digesting sideways here. There's nothing bearish about this chart at all, and you can see here that 108 to this 110 level, all in here, are where the bulls have stepped up and supported this market, the IWM, previously for all of 2014. So the big question is, will they do the same this time around? It doesn't look too good right now, but any day this could pivot here, and we could look just like this candle here or this candle here, and we could be off to the races, retesting these upper levels. So it's still a level to be cautious at, and I think really below this 108 level is when you start to you could either get short, or you could just really tighten up any of your longer exposure that you've had on. So that's enough about the indices right now. Let's get into some metals. Gold, obviously, this is a weekly chart. So yeah, we can start here, and you can see it looks like we're just beelining for this multi-year support down here about 115 or so. And last time we were here was basically kicking off the year 2014. And if it's anything like silver, then we could see a breakdown if it's going to follow suit just like silver did. This one is already through the lows, the multi-year lows that it put in back in 2013. So, this one here, again, let's go back to a daily chart. I don't see any reason to step in here and own silver at this price. Not as far as a technical picture goes. Probably oversold, on some metrics, but really you need to see some more stabilization of prices before just any further downside. Same thing with gold. Just because we're approaching this big level here, everybody's watching it, I wouldn't just pick up and buy blindly because it's approaching some multi-year support, or what you would hope to be support. So with that said, that the metals picture is pretty bearish. So we'll jump into let's jump into Natty Gas. This is one that I own now. It's trying to break out here. It's just a sideways day, and natural gas has been frustrating most of the year, and really, especially in these past couple months, it's just been range bound, bouncing around this range. So this is the time we're looking for that upside breakout. I got long some early yesterday, and I'm holding it. Really the stop is below yesterday's, into this gap or into this body low 2170. I'll dump my position, but I am looking for some further upside breakout here in Natty Gas. No idea if I'll get it, but let's hope so. Next, let's move into some stocks. Let's start with Apple, and this really hasn't changed too much. It's still range bound in between this $98 to $103 level. It's just right in the middle of it. It's so much chop in here. It's just not an interesting place to be right now. Not for me. If you're in a long-term position, long-term hold from earlier in the year, then by all means, stay in there, and nothing's wrong with this at all. But I mean, looking to establish a position right here, it's good for intraday trading, but I don't see too much one way or the other until one of those levels get broken. Netflix is the next one we'll talk about, and you can see it did go sideways here. This day here, it looked like we were going to break low and potentially come retest this 420 support, but instead the bulls pushed us sideways for 5 days, and then today, you can see we tried to make a break for the upside. So it does look promising on Netflix. If the bulls can hold this as a at least a short-term low and start breaking us back up above 450 and then 460, then Netflix could be on play alongside again. For now, I'm just sort of waiting and seeing what happens here. Is this going to be a false breakout? Which could lead to a further continuation of the short-term downtrend, or will the bulls be able to pick this up and continue higher? So keep an eye out for Netflix. No trade just yet. Tesla, another one that this broke my 245 support, but it's been pretty frustrating. Yesterday it wasn't a real clean trade one way or the other. Today, was back and forth, had some early, just dancing around this level, and then late day it sold off. So Tesla, again, is in a downtrend here on the short term. Anything below really today's lows, as long as it stays below 245, 247 or so, then it's in trouble of putting in a larger time frame retracement. So the bears still have the court here. Let's see if they can keep the pressure on. Next, let's look at Facebook. Facebook's been another frustrating one. It's been tough to buy momentum. This is intraday and really daily. I mean, it seems like Facebook always goes out on the highs. Look at all these nice big green body closes all the way at the highs pretty much, and then the next day it'll just shake and bake around, and ultimately it'll end up on the highs. So it's been sort of frustrating if you buy strength. If you buy dips, you probably love Facebook and you're making a lot of money right now. It's still doing its thing. It's just grinding out new highs very slowly, and without a lot of momentum. So it's still in a strong uptrend. It's still basically grinding trying to hold us up in the market. So stay with it. I don't own anything. But intraday it is interesting to try and trade those new highs. Twitter, this one here, again, still pretty strong. It's really just digesting, in a sort of a sloppy pattern, but it's all around pretty healthy. It's still above all of the fast moving averages, and it's just carving out some type of base here. And hopefully, we really need to see it back above $52 and eventually this $53 mark to get going. But for now, Twitter's just a consolidation, wait and see. It's been pretty boring recently because it hasn't been in play, but it's certainly something you should keep an eye on. GoPro's the next one we'll talk about. Obviously, there's not too much I can say that hasn't been said because, the stream's been all over this one. It's just a beast, still heading higher, very extended. Looks like we were going to get some sell-off today, but you can see that they're just still supporting this. And this is a pretty violent one to try and trade, and it can move really quick. So you got to be careful trading it, and that's sort of the nature of the beast when you're in something that's such as a high momentum in play and just watched instrument like GoPro is. So you need to be careful, but for now it's definitely the momentum leader of the market. So perhaps we need this to really start to crack before we see the market really crack further. Who knows? Looks like it's beelining for $100. Looks good, can't chase it, but it's fun to watch. Loco, here's another one. This was a recent IPO, and this one's been going sideways kind of quietly too. Had a quick run up here on its first week of trading on its IPO, and then it's kind of just going sideways. which, surprisingly looks similar to GoPro, where it had its crazy, a nice rip on its first week, went sideways, digested, and then boom, it just exploded. So who knows, maybe Loco turns into a GoPro 2.0. Keep this on watch. I am looking for an entry on this. I thought I was getting it today, and I was ready to pull the trigger as it ripped early in the morning, but I held off. I wanted to see how the close was, get a little bit more action developed during the day, and good thing I did because this candle sort of just faded off, and you can see it didn't close so strong. So keep an eye on it. I like it. If it can start to clear above pretty much today's highs, 37.50 really, it could be in play for a nice little move to the upside. Ford GM, these have been, well, really just Ford getting crushed. I mean, just a massive outsized move yesterday because, this is Ford, this isn't GoPro, so a move like yesterday, 7%, I think it was, is pretty drastic. I'm not even sure what the news was. It must be a sales numbers or something. But you can see we're coming back into multi-year support here around 1450. Take a look at a weekly chart, which I haven't really done at all. And, you can see, yeah, so it does have some significance here. When it gets slammed down like this, you really just want to see some digestion. It depends what your time frame is, but see what it does, see how it hangs out here. A little bit of continuation from yesterday's sell-off today, but again, let's just see how it acts. General Motors, very similar. I've been watching this one, sort of a head and shoulders pattern, sort of sloppy. I was short some, and I ended up covering it earlier in the day today, just when I looked like the market was going to turn. I wanted to reduce some short exposure, so I took General Motors short off. Probably a mistake. I mean, it still looks poor, but we'll see. It came off a little bit off of its lows, by the end of the day, but keep an eye on it. See if this can get some more traction and follow suit with Ford. Casinos had a great day today. Win, nice candle here. LVS, nice candle here. They've been in sort of protracted downtrends for most of 2014, so perhaps they are finally saying enough is enough. So keep an eye on these. Not really anything I'd want to trade off of. I'd like to see these bases just have been more developed. So, chances are we probably, it's likely we do see some follow through after candles like this, but keep an eye on, or just be aware that you are in a protracted downtrend. So you still do have that overhead supply sort of metric working against you. Another one that was green today that was looking better earlier in the day was Plug. Again, just this little small cap here, but this thing can get going when it does. It looked like it could, it was going to have a nice strong finish taking out this previous pivot, but you can see it got faded and closed just marginally green. So keep an eye on Plug. No real trade for me there yet. Hess, here's one I am short. I did stay with it. It broke down below this horizontal range that it was developing in, kind of bear flagged, and then tried to break today. It came off the lows a little bit, but still doesn't look too healthy. I think above, 96 or so, I'd give it up, but for now I'll stay short Hess. Some names, let's see. Baba, let's see, this one here, again, daily chart, still not too much going on. Tried to get going again, like a lot of these other names today, but couldn't quite get it to happen. It's just in a real digestion pattern here. Ultimately we just need to see which way it breaks. Below 88 starts to get pretty ugly. Above 91 starts to look pretty good. So just keep an eye on it. I'm just waiting and watching. I think 91.50 is pretty much the upside level I'd watch to get involved. Otherwise, it's just not that interesting. All right, so a couple of setups to look at going forward. Here's one, data. I like this one, especially if it can start breaking above $73.80 or so, or really $74. Start breaking above this recent range. This is on my watch list. I'm not involved right now, but a nice run up at the beginning of September, and now we're just going sideways. So keep an eye on this one. I like the formation it's in. EMC, here's one we talked about a little while ago. $30, big multi-year level. Is sort of the breakout level to watch. It's still got some room after this rejection earlier last week, but let's not forget about it. DHX, here's one that's tightening up a little bit. Another one that sort of had a nice run at beginning of August. It's been going sideways. you know, you could cheat into it above 850, maybe scale into it, get a first little position in it, and then really above this 875 level, you could add to it, and it would look good for some further upside action. You know, a little bit of cup and handle ish, not really a rounded bottom, but you know, I think above 875, $9, this one could move. Finally, FSIC. This is one I took a position in this today. Actually, I was I almost jumped on it yesterday at the close. Decided to wait for today. Saw a little bit of follow through. I jumped on it. Small position. We'll see what happens with it. It's a recent IPO. A lot of chop. Trying to break out now. We'll see how it goes. So that's all I have for today. Good luck trading. Again, let's keep the bigger picture in mind. Let's see what the SPY can do here. 196 to 198 is your immediate range. 199 is what the bulls need to reclaim to get some upside momentum back in their favor. So hope you enjoyed the video. Thanks for watching, and I'll catch you next time.